If you've watched my videos in the past, you may have recognized I've been talking a lot about my cheat sheet. My cheat where I've gathered all the information I can to help me give guidance or gain guidance as to what's going to happen to my stocks in my BUS 12 and my BUS 13 portfolios. Now, my BUS 13 is a portfolio that is basically dealing with the hardware that is going to have to be developed to upgrade our internet system and our data centers to handle the increased influx of search that artificial intelligence is going to put on the computers on the data centers. And then my BUS 12 portfolio focuses on the software companies that are going to turn that data over to us to help our lives make better. So I then have gone in and analyzed each of the 30-some stocks in my BUS 12 and BUS 13 portfolios relative to their financial strength, then to their technological strength. This is basically through charting, and then made a decision, do I want to own them right now or don't I? So then more recently, I recognized that I don't probably want to own stocks that have gone under their 200-day moving average because the momentum is moving away from them. So I added to the chart my cheat sheet, a calculation of the 200-day moving average and where their price was relative to that. And as I looked at it further, I said some of my stocks have dropped as far as 35% below their 30-day moving or their 200-day moving average. So does that mean that I don't want to own them? So I looked at relative strength and I saw that some of them have dropped below 20% or 30% relative strength. And history tells me when they get below 40% relatives or 40 relative strength, they're probably going to spike up. So what I then said was, okay, let me go back to the research that I have done on projecting on their projections of their revenue and growth earnings in 24 and 25 and see how that relates to their relative strength. And can I find a sleeper? Because a lot of the enthusiasm around artificial intelligence has waned as we focused on interest rates and inflation. So I've redone my cheat sheet. Don't have it all filled out. This is what it looks like now. But what I want to do in this video is take you to it on my computer, explain it to you, and tell you what I've learned and what I feel are four stocks, the four best stocks in AI to be buying right now relative to their financial strength, their technical strength, and their projections in the future, and where they sit relative to the 200-day moving average. I know this is complicated because it's a tremendous amount of data, but I'm analyzing the data using artificial intelligence to help me make better investment decisions, and I want to share that with you right now.
Best of Us Investors presents Kerry Griegmeyer.
Okay, this is what you're going to find when you go to our website, Best of Us Investors, and you go under the platinum level and you look at Kerry's long-term portfolio and you click on that and you'll get a drop-down menu that says to the cheat sheet. And this is where it is. What I've added is these four columns here, which show you what the earnings projections and the revenue projections are for 24 and 25. Now, these numbers come from the earnings calls, and so I have to manually go in and record them and then enter them. And you'll see I haven't done it for everything at this point. I did it for those that I thought maybe there were some opportunities. And how did I come to that? Well, I looked at a stock like ACLS, and I see that it's at 75% of its 200-day moving average, meaning that it's 25% below it. And I says, is there an opportunity here? And should I consider it? And so I went and I said, okay, what are they projecting their earnings to be in 24 and 25? And it says that they said they expect an 11.4% increase in earnings in 24, a 13.8 in 25, and an 8 and an 8 in revenues. And I said, well, that's not too outstanding. I like those who say they're going to have some outstanding numbers. And so I came down to here test systems, and I see that they are roughly, what is that, 36% below their 200-day moving average. I have a price target of 23 on it, and it's at 24. That's interesting. But look at this. They have said they expect their earnings to go up 77% in 24 and 43% in 25, and their revenues to go up 58 and 55% in 24 and 25. And then I go and I look at what their relative strength index is, and it's at 25.38. And what I see is that whenever the relative strength gets below about 30, it usually sends a message to the market: this stock is oversold, and it's probably going to go up. So with that in mind, I have placed an order to buy shares of AEHR at $23 per share. And I'll probably get it today. So that's what I've done here. And I've gone through and I found stocks. Here's Advanced Micro Devices, projecting earnings growth of 42% in 24 and 32% in 25. That's nothing to snuff your nose at. And revenue, I would like to see it higher, but at 16 and 15%. So that gives me some guidance as to what I should buy. Look at this, though, as well. Here we have Apple, who is at, they're 5% above their 200-day moving average, but their earnings projections are only 6.5 and 8.6, revenues 3.4 and 5.9. That makes this AEHR look a heck of a lot better than that of Apple. So then we come down and we look at some other stocks. Here's Extreme Networks. Again, has fallen way down. Its relative strength index is down around 24.4. Its earnings growth are 26 and 21. Its revenues aren't near as strong, but what this tells me is they're improving their profit margins. If their earnings aren't growing if their revenues aren't growing like their earnings, that means their operating revenues are coming up. This is Intel. Did you know this? Still 20% above its 200-day moving average. So it's not the buy that some of these others are. Yet they're projecting earnings to grow by 98 and 40%. Revenues growing 13 and 8. Again, meaning that their operating margins are increasing. So let's look at the one we're all wondering about. What's the position with NVIDIA? Well, it's 28% above its 200-day moving average and 51% above the target price that I'd like to buy it at. But look what its revenue and earnings growth are. This is earnings. They're projecting a 226% increase in earnings, a 53% in 25, and a 100% growth in 24 in revenues and 47% growth in revenues in 2025. Then we have some that also look kind of interesting. This is Symbotics, a stock which I currently hold, which is actually showing that it's 8% above its 200-day moving average, but it's showing no growth in earnings in 2024, but 161% growth in 2025. and a growth in revenues of 56 and 45%. So I will continue to hold that, knowing I might not get it in 24, a big bump, but I will probably in 25. I know this company. I know what they're doing. They've got back orders to build out distribution centers for all kinds of companies, and they've got back orders. So they're having to spend a lot of money to get up to speed to meet this growth demand. So I'm staying with them. But I've done this, as you can see, for a number of the companies. This is Marvel, actually going to show a negative number in 24, a positive number in 25 on earnings, a negative number on revenues, a positive. So it gives me guidance as to, do I want to get back in these stocks or don't I? Are they some that give me some opportunities that maybe the rest of the market isn't looking at? So that's how I use this. That's where it's available to you. This, as I say, has just been added today, and I will go through and fill out these other brackets for the other stocks that are in these portfolios, and then I'm probably going to drop some stocks out because I don't see the potential in 24 and 25. And then after I do all that, I'll come over and do it for the Dow. Again, I only look at the Dow as a barometer. And to give you what that means, well, I know that of these stocks in my BUS 12 and 14, 24% of them are under their 200-day moving average, whereas 56% and 58%, respectively, in the Dow and the S&P 500. So this is a barometer. I will continue to update it. I want you to know where to find this. As I said, I'll show you right in a second. Okay, this is our website, Best of Us Investors. When you come to it, you'll come down here and say, become a member. And you have three choices. One is the tribe, and that is access to our Discord where you can come and chat with other people. Premium Plus is available for $20 a month. There is a 7-day free trial where you can come and you get access to my portfolio, to my opportunities in videos, some private videos, but where you get access to the cheat sheet is over here at the Platinum, and you also get access to Mark's swing trading. Once you become a member and you subscribe, you come back up here and you go to services, and again, if you're in the Platinum, you come to BUS portfolio long term, and you'll see it gives you a pop-up menu, and that gives you access to the cheat sheet. And the cheat sheet's over here, and it has a tutorial that you can watch, and it explains more to you. The tutorial won't cover the growth projections because I just put those in today, but I will update that. And then, as I say, I will update the Dow to give you some, although the Dow, the stocks in the Dow, I want to add also what kind of earnings projections, because again, you may be interested in some of the stocks in the Dow, and some of the stocks in the Dow are repeats of those in the BUS, but I use it as a barometer. I want to know, how is my portfolio performing relative to the Dow and the S&P 500, and how many are above and below the 200-day moving average. So that's Best of Us Investors. I'm not going after clicks. I'm going after people. I'm looking for people who want help in making better investment decisions. And I'm willing to do the analysis work. I'm willing to put in 4, 5, 6 hours a day of my time to take my knowledge and my experience and transfer it into something that you can have access to. That, I think, is a good deal. I hope you do as well. And in order to do that, you merely need to get on the bus. It's the Platinum program, and the link is in the description.